Yeah, I remember hearing somebody says like if your grandmother calls you and asks you about something, get out now. Like your grandmother calls you about about GameStop, and you're like, it's time to get out of
Time to sell.
GameStop
Time to sell some GameStop.
when everybody knows
So
about
many
it.
people message me, "What about this game? Should I buy GameStop?" Uh, w There's a million things to buy. There's a million things to buy. You wanna buy the thing that's already it went up 500%. Should I buy some more? No.
Well, you told me that people really like to buy stuff when it's going up, and they hate to sell it when it's going down, which is sort of the exact opposite of what people
Yeah.
need to do.
Everybody knows that you're supposed to buy low, sell high. Everyone knows this. But everyone buys high to sell higher because they wanna buy when they know it works, which is exactly the opposite of the point. When it works and people go, "Oh, it works. I wanna give you money." That's where you'd be like, "Great. I've been collecting this thing so I could sell it to you." Um, but also, even if some people buy low, they can't sell high. It gets high. They go, "Okay, I bought the low thing. It got high." And then they go, "Well, if I sell, what if it goes higher? What if it goes higher, Peter? Then I'll feel like an idiot." And so then they don't sell, and then it comes down. Like inevitably, everything goes up and down. So it's a trigonometry. It's a sine wave. We're in a cyclical system. Comes down, and then as it's coming down, they go, "Well, I won't sell it yet because it might still go back up. It might still bounce back up." And then it goes down past where they bought it, and then they go, "Oh, it's too painful. I can't hold this anymore." And then they sell it lower. They lose money, and then it goes back up. Classic. It's rinse, wash, and repeat. In fact, it's so predictable that the bank, every time you place a bet on a stock, every time you purchase a stock, the bank purchases the other side of your trade. Just by doing that, they win 90% of trades.
So, okay, we were talking about this earlier. I don't know. I know we spent a lot of time here, but like, what would you recommend someone do to sort of break out of that habit or of that sort of pattern, to learn how to sell something or whatever? Like you were telling me something earlier about selling a tiny
Sure.
amount of it.
So, first of all, if you're gonna just to begin with, you have to know what your time horizon is. You got to know: are you thinking? Do you have this asset short term, medium term, or long term? If you have a long term, don't make short term decisions. And if you have short term, don't be telling me something 5 years from now it'll be good. So if you're buying Bitcoin, let's say, and you're like, okay, I think Bitcoin could be the next big thing. Well, then you buy it and you never sell it. And on the dips, you buy more. You don't even consider selling it. Well, how can you do that? Well, you make sure your position is small enough that you can sleep at night. If you can't sleep at night and you're always worried about your position because you need that money to live, then you made it too big. It's got to be something that you can just be like happy when it grows and you're perfectly fine with losing it. Then you can hold it long term. If it's short term, then you got to know how much money are you trying to make. If you're trying to make a short term bet over the next 3 months, you go, what's the amount I'm trying to make? So then you got to buy it when the fear is at its maximum that you've seen, right? And you might miss the opportunity, right? You might not get any down, but then don't buy it. Wait until you get the fear. You buy it then, and you go, I'm going to sell it when it gets up by this percentage. Don't worry about dollar amounts. You go, I'm going to sell it when it goes up 15%. And when it does, you press the button or you set it to sell on its own, and then you move on. But if you're actively managing a position and you find that it's too difficult, you're buying high and selling higher, or you bought low and you can't let it go like we were talking about before, what you do, you have to train yourself to be able to do it. That means that whenever your position is up, let's say at an all-time high, sell a little bit of it. Sell 0.25% of the portfolio. That means if you have a $10,000 position, sell $25 worth of it. Just sell a little bit of it. Did I get that right? 10,000? Yeah, exactly. Sell a little bit of it.
Yeah, no, you did. You got it
Yeah,
right.
carry the one. And if you sell a little bit whenever on a $10,000 position, if you're taking off $25 at a time, it's not gonna kill you, right? If it keeps going up, you'll be like, "Okay, fine, I'm still in it." But if you keep doing that as it goes up, you'll gather more money. It'll be 25, 100, 200, 500, and then one day it'll drop precipitously. And when it does, then you buy it back in. You put a little bit of the money that you took out back in. You put
Does
it
it
back
matter
in.
how much it drops?
anything,
Does it have
whatever
to does it have to drop below what you purchase it
No,
at or whatever?
it's just for you to practice buying and selling it. So if you go on red days, I'll take off a little bit, and on green days, I'll take off a little bit, and on red days, I'll buy some. It gets you into the habit of buying and selling it, and buying and selling it, and buying and selling it. Now, if you do that well enough, you can actually make more money than if you just held it. But it also teaches you how to not be married to your position. And at least I found that's what helps with me. Until I started doing that, I just I I kept being like, oh, it could go up higher. And what's cool is that the first time Bitcoin then drops 30% and people are losing their minds. Oh my God. Or any position that you're in, it drops and people go, oh my God. Ah, ah." If you were fundamentally right, right? If you weren't just gambling, if you had a reason to buy this thing that you thought long term it would be good, what happens is that when it drops, it's like a Black Friday sale to you. You go, great. Now it's time to go shopping. Now I have the money that I've been peeling off the entire time. And it might just be 2% of your portfolio, right? But now you have this money to go buy things on sale, on discount. So that's what I like doing. And then you train yourself to be able to buy and sell properly.
So either you're buying to invest and it's long term, your long term horizon, just buy it. Don't even worry about the price. Don't even worry about it. Just let it go. Or you have a set marker, and when it reaches that, you forget the noise, you forget the news, you forget everybody. You sell it when it reaches your marker. It's like when I go to the casino and I say I'm going to put $5 or $10 into the slot machine. If I lose $10, I'm out. If I make $20, then I get out. Like, and when I do it, I just leave because I know eventually that money will go back or I'll lose more, or whatever it is. So once you set your fixed thing in a sober sort of mindset, in a sober place, and then you get out when it's that no matter what.
That's
It's
right.
like
And these
it's
brokerage
like I was
accounts,
watching this movie. I was watching this movie. I can't remember, some heist thing, and then something goes wrong with the heist, and guys like, no, it's time to go. Like we said, if anything goes wrong, we get out of here. And they're like, no, no, but there's a big score. And he's like, yeah, no, don't get out now,
that's
buddy.
it.
Like you said, you're gonna get out the moment signs were bad. So get out right now. And then you break your rule, and that's when things go bad. So it's either long term hold, or if it's short term and you're trading. You told me this thing about selling. When it reaches its top, sell 2%. Is that 2% just random number, or is that a good amount?
It's more of a random number. Anything more than 2%, and you're really cutting your position. Um, it's anywhere between 0.25% up to consider. I mean, whatever, you can do less than that, but let's consider 0.25% of your position all the way up to, let's say, 2%. Um, I find that's a sweet. Usually, I like 0.25% all the way up till I get to a 1% position. And what I do is that the more the position moves in my favor, the more I'll take off. But as it's moving, this is something we'll get into more in other videos. But you go, okay, but it's in the process of rising right now. What if, as I'm looking at it, it's going up like a rocket? Well, that's not what when you sell some, right? But what happens is that you get you don't look at the price, you look at the rate of change of the price. How is the price increase in itself? Is it accelerating or is it slowing down? And you can see that just by looking at the price number. You can see that by looking at volume. There's all kinds of different metrics you can use that we'll talk
Is
about
that the
in other
velocity? Is
videos.
that a velocity or?
No, no, it's volume.
Okay.
So it's a volume and volatility, and basically what happens is that I like to equate it to a car. If you hear a car going, then you assume that it's going to continue going faster in the next instant. But if you hear a car going, then you assume that it's slowing down. And so if you hear this acceleration at the beginning, as soon as you hear it start to slow down, that's where you sell a little bit. So you give yourself room to ride the wave up, but as soon as it shows any hesitation, you'll sell some, and you go, "Oh,
Because
Tom,
what
yeah,
people tend to what people tend to do is they want to sell right when it's at its top,
right,
right? But no, you want to wait till it starts coming down. Then you have a clear signal, as opposed to, is this the top? Is this the top? Is this the top? Right?
exactly." So if you look at the at the acceleration and deceleration of the price, how it's moving, as opposed to what the price is, then you get a
Hmm.
sense. Now you might say, Tom, what happens if it slows down and then speeds up again? Yeah, of course. So what are you going to do? Like, if there's one thing I really love learning from Real Vision, it's this quote that I play to myself constantly. It was really this light bulb moment. If this trainer, Real Vision is a financial platform that basically democratizes financial information. You get high quality financial information that you would never have gotten before. And this woman was explaining. I wish I remember her name. She said. She deals with traders all the time, who want to slit their wrists and drink themselves to death because of a bad trade. And she had to basically explain to them, look, you're never going to be happy with a trade. You'll either not be in it, miss a trade completely. You'll either be cutting your losses, right? Because you've lost. You'll either be selling too soon and there was more that could have been in it, or selling too late because you gave up some gains along the way. You're never going to be happy. And if perchance you do buy at the very bottom tick and sell at the very top tick, then it was luck, and you should not feel happy about that. It is not reproducible. So all you're doing is picking which horrible thing you could deal with. And if you're not the kind of person who could choose between horrible things and keep your money, then you cannot be a trader or investor. You just can't.
Well, you can just invest. You can just buy Bitcoin, set it, and forget it.
Yeah,
That's what
yeah,
I like.
yeah. People
I'm
say
like micro.
people say that if they're not looking at their account. Like, I know people who buy Bitcoin and then they forget they have it. Fantastic. You know who the best performance portfolios are? Like, when they study whose investment portfolio performs the best out of literally every type of person on the planet. Do you know who?
Who?
Dead people, because they never touch their portfolio. Not that every dead person's portfolio does well, but on average, if you just buy and hold, that's usually the best.
Well, you learned this the hard way. It's the emotions in trading that is the killer. Like if you got feelings about it, then
Well, I mean, you say the hard way. That's an understatement. If I had a gun, I know the taste of the barrel. I'll tell you that. I know the taste of the barrel.
oh my
I
god.
wouldn't pull the trigger, but I know the taste of it.
Oh my god. If
Yeah.
you are suffering out there, there's help out there for you, okay? Contact someone and ask somebody for help. But yeah, we've all been there. Um
All right.
look,
I've
I
been
think
talking up a
look,
storm, Peter. What's
yeah,
your
we
thing?
could talk about this all night.
Yeah.
I do have one last question on that, okay?
Mm.
And what do you think about, okay, let's say you bought it, maybe you bought it long term, whatever, you weren't thinking about trading it, and now your money has doubled, triple, quadrupled. What do you think about just removing your principal
Okay.
entirely?
So that makes a lot of sense for shares, or rather, it makes a lot of sense depending on what you're buying. If what you're buying is um, a share of earnings of a company, right? You're there because of just the price appreciation of a stock. So you're buying a stock that doesn't provide a dividend, and you're just there to buy low and sell high. Then yeah, pulling out your principal makes sense, because then you pull out the money that you put in, the money that's left on the table. You're free to lose. I mean, it's you sort of want to pull out more than your principal, because why did you bother doing this to begin with? So maybe 10%, 20% more than your principal, but fine, you can write it. But that's different than Bitcoin, because when you're buying a share, you're buying a share in earnings. Um, Sorry, when you're buying a share and there are no dividends, you're buying it for price appreciation. When you are and you're buying into the management of the company, the product, and all that. When you're buying Bitcoin, you're buying a network effect. You're buying something that is, think of it like an explosion. It's an explosion that gets bigger and bigger. That the surface area of the explosion gets bigger and bigger as it gets wider and wider, and that's what you're buying. So then you would sell if you think that this explosion will stop. So if you know enough about network effects, you know that you, it needs to get to a significant saturation period. Basically, it has to get to the point where, sort of like Netflix, the way Netflix, everyone kept telling everybody about Netflix. They did a great thing, so more people got on. People kept, because you had one profile, because you had multiple profiles on Netflix. It made sense when you have your profile, you could share it with other people, right? Get three other people on Netflix, why not? And then those three other people become evangelists and tell other people about it as well. Facebook, you had this as well. It's Facebook is more fun when you have other people on it. So when you're on it and you like it, you want to invite more people and beyond. And so when you get to the point where it's saturated in North America or in a certain area, then you have this slowdown in the rate of change for the network, and then you might say, okay, at that point you want to sell. But we're not seeing that. And
Sell your principal.
well, that's where you would even consider start selling, right? But I think the adoption rate right now for Bitcoin is at 0.01%. Like, don't quote me on that, but I think it's something super low. Like, we're not anywhere close to where it could be, and people are confused because they look at the price of Bitcoin. If you get confused by the price of Bitcoin, you go, well, it's moved up so much. It moved up 120,000% over the last a few years. How can it go any higher? Well, you didn't think it was going to be at this price 10 years ago either, or you would have bought it then. And the mechanics that were in place over there are just better now. There are more people coming in, more adoption, more network connections happening. So you don't want to be in a situation where you're selling it now and you're taking out your principal, and let's say you're up 100% and you take out your principal. Well, you slow down your rate of growth.
But if it saves you
Uh,
your emotional turmoil, if it saves you the emotion, then that might be
you're
good,
right.
right? Then you're playing with
If
the
you
house's
can't
money.
handle it emotionally, absolutely take it out. If you can't handle it emotionally, do not
Yeah,
stay in.
and then just play with
Stop
the
with
house's money, and
it. Right.
then that's the end of the story. And
But
then all the
if
rest
you're
of it
just trying to
go.
do risk management, if you're trying to risk manage your positions, like, then I would say just make sure the size of your position that you initially invested is small enough that you're okay with losing it and let it ride. Now, what happens is that people, when the price goes up and up, they start spending that money in their head. This is what I'm going to buy. This one I'm going to buy, or whatever. And then all of a sudden, that initial amount, it's not so much I could have lost it before because now I'm losing what I could have had. Okay, fine. Then
Deal
you
or
gotta
no
sell.
deal.
Then you gotta sell.
I get it. I get it. And you told me one time.
But if it doubles from here or quadruples from here, you're gonna blow your brains out anyway. Because if you're selling it before it's high, and its high is 10,000% higher than it is now, you're not. I say just deal with discomfort of losing your dreams now if it falls, than to be in a situation where you know you sold your square block of Manhattan that you owned, and now you don't own it anymore. You don't want that.
last thing to say on that, you told me think of Bitcoin. 50% of it goes to the tax man. Just at the very
Oh my
minimum,
god,
50%
the
of it is
very
not yours.
minimum. Yeah, they're gonna tax the crap out of this stuff. So that P&L number that people have, that account value number, if I can slice that shit in half, slice
Just
it.
whatever you got in Bitcoin, at least 50% it ain't yours. So if you're spending money in your head, that's why I wanted to bring that up. All right, Tom. Oh, we could talk about this all day long. And we
Mhm.
do. We do. We've talked about this already an hour today. And here we are online talking
And
about even
yesterday and
more.
the day before.
And I'm sure we can have even more going on. If you
Great.
love what we're doing, I really encourage you to go to patreon.com/happyforchange and become a patron. For $10 a month, you're going to get access to these live streams. The live streams are free, but if you want the recording of the live stream, you can get the
Yeah,
audio
the audio's for 10 and
$10 a month,
the
and you'll get the video for $25 a month. You'll also get access to our Telegram group where you're going to access to chat, text chat, and voice chat. We're going to be on there on a regular basis. So this is the beginning of something really fun. Tom and Peter Hartman here, Sacred Prophet, Tom Hartman, and Bad Guru here. We're here to help you out. And if you have any questions, please feel free. Thank you to everybody who's watching this. I really appreciate it. Tom, you had fun today?
so much fun. I can't wait till we talk about portfolio asset allocations and different way of managing risk in the future. It's going to be so exciting.
It's going to be so great. I know you think, I don't need to know this information. You need to know this information. Subscribe to the channel, facebook.com/happyforchange if you want to join the groups, or you can just subscribe to us here over on youtube.com/happyforchange. Here's where we are.